Hi and Assalamualaikum Diartikel to our lecturer, Madam Anastasia binti Harbi. Today, we will be discussing on Chapter 8 and Chapter 9, which is Fundamentals and Technical Analysis. We conducted this presentation to discuss and explain the concepts of fundamentals and technical analysis and estimate return and risk of investment through prices series and company performance. Before we start, let me introduce myself and my group members. My name is Teju Hermes. Next, we have Abu Hanifa, Andrew Jidin, Muhammad Muslim, and last but not least, Windy binti Edwin.
Liquidity ratio, the current ratio in 2023, which is 162.59, is higher compared to the year 2022, which only has 109.38 times. An increasing current ratio generally indicates improving liquidity, meaning Mr. DIY is better positioned to cover its short-term liabilities with its short-term assets.
For the market value ratio, they have two formulas, which are earnings per share and per earnings ratio. For earnings per share, the Mr. DIY company in 2022 has the price of market ratio show a total of Ringgit Malaysia 14 ringgit and 32 cents, and in 2023 it decreased to Ringgit Malaysia 13 ringgit and 34 cents. This decreased number shows a decline in market value, which can be attributed to several factors. While this decrease is concerning, however, the earning per share shows an increase in 2022 to 2023 from Ringgit Malaysia 70 cents to Ringgit Malaysia 89 cents. As for per earnings ratio, the price earnings for market ratio of Mr. DIY company in 2022 shows Ringgit Malaysia 14 ringgit and 32 cents, and in 2023 it becomes Ringgit Malaysia 13 ringgit and 34 cents, which shows a decrease to Ringgit Malaysia 98 cents, which are the lower ratio that indicates that the company stock is undervalued.
The ROA decreased by 12.71% in 2022, indicating a loss for the company related to its total asset. On the other hand, the ROA significantly raised by 22.14% in 2023. The ROE was declining by 24.18% in 2022, indicating a poor return for stockholder. However, the ROA increased 28.88% in 2023, indicating increased shareholder profitability.
Debt to equity ratio. Mr. DIY had improved from 2022 to 2023. In 2022, the company had a higher level of debt compared to its equity. However, in 2023, Mr. DIY was able to reduce its debt and increase its equity. This is positive development, as it means the company is relying less on debt financing and instead using more of its own fund to operate. Having a lower debt to equity ratio makes Mr. DIY financial position stronger and less risky.
So first, we have slide that show us this chart about candlestick of January 2023 and a bearish trend. So the investor should hold the stock for further market development. Next is about this slide for February 2023. This chart candlestick of February 2023 are bearish downward trend. So the investor should hold the stock for further market development too. For the third slide, this slide shows us a chart candlestick of March 2023 are also a bearish trend. The investor should hold the stock for the time being due to the chart bearish trend. For chart candlestick of April 2023 are also a bearish trend. The investor should hold the stock, continue keeping an eye on the market development.
For the first chart, it shows a bearish trend. It can be seen where the overall direction of the line graph is downward over and indicates a decreasing in value. Based on the recent bearish trend, as the investor, it might consider with caution and should conduct a research on the specific stock, including a company, fundamentals, and trend, since it indicates a bearish trend. For the second chart, most of the pattern from left to right are upwards to downwards, which shows that these charts are more to bullish than a bearish. So as an investor, it might should hold the stock. However, it is essential to consider other factors such as company, fundamental, and market conditions before proceed to invest. For the third chart, it shows a bullish trend where the price movement are downward to upward and the result seems to be upward from left to right, which can be suggest it's a bullish trend. So as for an investor, they have the choice to make a holding or buying the stock only if they can handle the risk. For the last chart, it shows a bearish pattern because of the chart that resembles the head and shoulder patterns, where the left shoulder occurs after the bullish trend, then followed by decline, and the head forms when price rises above the level of the first peak before starting falling. For this bearish trend, the investor should be cautioned with the choice whether to sell, buying at the lower price, or hold if it can bear the risk.